Hello, everybody. I think we have a sufficient number of people to start today. Welcome to MLA's 2025 Cattle Industry Projections webinar. Today we'll be discussing the content of the recently released March 2025 Cattle Projections document for the Australian cattle industry. Thank you very much for taking the time to attend this morning. It's just 11 o'clock this morning here in New South Wales. My name is Jack Johnston. I'm the Corporate Affairs and Media Manager at MLA, and I'll be the moderator for today's webinar. The team presenting is Stephen Bignell, Market Information and NLRS Manager, and Market Information Manager, Erin Lukey, Senior Market Information Analyst, Emily Tan, Market Information Analyst, and Tim Jackson, Global Supply Analyst. I'm going to hand over to the team now to get a quick introduction before the presentation, starting with Stephen.
Thanks, Jack. So as you've said, I'm Steve Bignell, the Market Information and NLRS Manager at MLA. And what my team look after is all the supply, pricing and production insights up until the processing sector. And in NLRS, we also look after pricing and indicators. So part of the team's remit is to deliver the projections, which we launched yesterday.
Great. Erin?
Hi everyone, Erin Lukey, Senior Market Information Analyst. So I work with Steve on the market information output. So a lot of these reports, including projections, also surveys and anything covering supply demand.
Emily?
Yeah, so hi, my name's Emily. I'm the Market Information Analyst. I work very closely with Steve and Erin and pretty much cover everything up until this processor.
And finally, Tim.
G'day, my name's Tim Jackson. I'm the Global Supply Analyst at MLA. And what that means is that I look at what's happening in other countries from a kind of supply and production perspective, and then understand what that means for demand for Australian red meat. And also looking at all of our export information and trade information and all of that sort of stuff, which features then into how we understand demand in the global market.
Great, thank you everybody. Everybody's contact details will be made available at the end of the webinar. If you have any supply, price or production related inquiries, please reach out and we'll be happy to get back to you. Before we start, I'll cover a few housekeeping points. All participants, as you'll see, are on mute throughout the presentation and cameras are off. There will be allocated time for questions at the conclusion of the presentation. Feel free to enter your questions at any time throughout the presentation by scanning the QR code that you'll see on every slide in one of the corners, which will take you to our Slido platform. There you'll have the opportunity to submit questions and we'll get to those towards the end of the presentation, as I said. Also, this webinar is being recorded and a copy of the recording will be uploaded onto our website at MLA and to our YouTube channel as well if you wish to rewatch and to share the webinar. Right, we'll kick off with the webinar proper now. So the industry projection documents, which we'll run through today, are a long-standing initiative from MLA, providing the Australian red meat industry with insight into the major influences of the red meat sector for the short to medium term. Steve, would you please be able to provide a quick overview of the projections process, what's involved in forming the included forecasts and assumptions, and where the 2025 cattle document landed?
Thanks, Jack. So yeah, like you said, the MLA projections document is a really important document for industry. And as you said, we've been producing this in the MLA market information team. We've been producing the projections for over 2 decades. They're a resource that is used across the supply chain. So producers use them, processors, exporters, retailers, and supply chain analysts as well. The document includes a herd, slaughter, carcass weight, production, export and live export forecast for a 3-year period. So this year we're looking at 2025, 2026 and 2027. These forecasts are generated by MLA's model, and in that model we look at a range of different data points. We include ABS data, ABARES data, beef producer intention, survey data, peer-reviewed data, a feedlot survey that Erin looks after data from that. So we have a range of different inputs into that. And then once we have run those inputs through the model, we actually hold a broad and wide-ranging consultation process, both in the north and south of Australia, to validate the range of scenarios that the model puts out. In terms of this model, it's run twice. This document, it's released twice a year. So we've got the first in March, and then what we will do, there'll be a follow-up released in September this year. And in September, we will track how the industry has performed in the first half of the year, and we'll provide a sort of refined and updated document in September. The document timing is dictated by the ABS production and slaughter releases. The document is really important, and it helps industry know the inventory of animals and when supply of animals and finished product is going to hit the market. So it really helps us in Australia know what the global supply picture is happening and how Australia fits into that.
Thank you, Steve. Can you please run through the themes of today's presentation?
So there's going to be, thanks, Jack, there's going to be three themes that the team's going to cover throughout today. They are weather, production, and demand. So when we look at the weather picture, the intensity of the herd movement and beef production will be determined by weather conditions. Weather has the most significant impact on what happens in our national herd. The northern herd is generally in quite good shape, but it is at a lower stocking rate than it was in 2012 and 2016. So outcomes of the northern wet season will have a big bearing on both our breeding base and our actual herd number. While the southern system is in a situation where they are relying on a strong season this year, one season will not offset the impacts and the dry conditions that the southern Australia, especially Victoria and South Australia, have endured over the last 18 months. Secondly, when we look at Australian production, Australian producers have really invested in their production systems and their capability to turn off larger animals and heavier animals. The system as a whole has changed dramatically over the last 10 years. So since 2014, what we've seen is we've seen a 10% increase in carcass weights from 280 kilos to 309. This is a great phenomenon because what it really shows is it shows the productivity of the gains of industry. And what that allows us to achieve is it allows us to achieve a record production these days off lower turnoff. So last year in 2024, we had a year of record beef production, and we achieved that of 1 million less animals being processed. So it shows that we can achieve higher beef production off lower slaughter because of carcass weights, and it's a 10% increase in productivity. Processors have resolved many of the labour and throughput limitations that we've talked about in recent years, but cold storage and logistics now remain constraints, and they're the constraints that have emerged after or as a result of this growing production, more beef being produced off less animals. The third picture and theme that we're going to cover is about demand. So the demand picture is shifting in a really, really positive direction. Australia acts counter-cyclical to some of our big competitors in the beef game, namely Brazil and the US. So this means that in periods of our peak production, we are faced with lower global supply. This in turn creates strong demand for Australian beef, and this has and will continue to provide record exports for Australian beef. So despite potential capacity limitations, processors have historically been able to adapt and move around when there's volatile supply conditions. And with strong global demand, this aligns with a period of projected high turnoff, and all together, that places the Australian cattle industry in a cautiously optimistic space as we move through the forecast period.
Thank you, Steve. Moving through the document, MLA compiles a number of assumptions covering weather outlooks, financial consideration, cost of inputs, and employment. So starting off with the weather and moving on to the economic outlook, Emily will take us through the major assumptions which will impact the projected output for the cattle sector.
Thanks, Jack. As Steve mentioned, weather will continue to be the most significant influence on 2025 turnoff. To forecast turnoff in the herd, we need to make a number of assumptions about the weather. So in the short term, how the northern wet season eventuates will have a significant impact on 2025 turnoff. The wet season, though delayed, has provided a significant foundation for some breeding regions, though these promising foundations could be interrupted in the current midterm outlook, suggesting a dry central Queensland. South Australia and Victoria will continue to face poor conditions, while varied conditions across WA and New South Wales will lead us to the assumption that 2025 will resemble those of the past 12 months, and 2026 and 2027 could be an average to dry year. Moving to the financial assumptions. The RBA met on the 18th of February 2025 to provide some positive updates to the macroeconomic environment. The cash rate saw its first reduction since November 2020 to 4.1%, returning to 2023 levels. This move will reduce financial pressure on households and may encourage producers to spend and invest in improvements. We may see an uplift in farm management deposits, stores reversing the reduction in accounts seen over the past 2 years. Production costs remain a significant concern for producers, with interest rates, exchange rates, and other market forces affecting profit margins. While CPI eased to 2.4% in the December quarter, producers have seen little financial relief. Most of the decline in CPI was driven by reductions in electricity, fuel, and housing costs. Labour availability will remain a concern for industry. However, the PALM scheme and the red meat labour agreement will be instrumental in supporting the processing sector. PALM scheme workers have been crucial in industry growth over the past 4 years. However, the sector's reliance on long-term employment has increased fixed labour costs, placing pressure on businesses to adapt to variable processing capacity.
Now, moving on to supply, this is definitely the projections document's most popular section. This is widely used along the supply chain and is hugely valuable in aligning industry in the expectations for the medium term. These modelled figures are sense-checked by industry representatives, are an informed and aggregated assumption from broad national consultation. Steve mentioned earlier that the dynamics of 2025 closely follow what we saw over the past 12 months. In a second, Erin will provide a more detailed overview of the current year and looking ahead further. But before we start, there's an important disclaimer that I'd like to mention with these figures. MLA's projections process is focused on forecasts. The ABS is currently going through a modernising statistics process, which has changed their reported historic herd size, adjusting the herd up until 2023. MLA's forecast for 2025 is based off these revisions and our own forecasts from previous years. Now, with that, Erin, can you please give us an overview of the forecast's results?
Sure thing. Let's just jump a couple slides. And so starting with the herd, we look at historic trends to sense check our starting point, and the female slaughter rate is a great indicator to understand the turn-off decisions of producers. So in December, the rolling FSR was 52%, which was the fourth consecutive quarter above our 47% destocking benchmark, which confirms the assumption of a decline to the national herd in 2024. So next slide. When we look forward, the Australian cattle herd is projected to reach 30.1 million head in financial year 2025, so by June 30, which is a 1% decline on last year. Then over the projected period, the herd is expected to shrink in the following 2 years as a result of turn-off remaining elevated to manage carrying capacity. This will result in a 3% decrease to the herd to 29.2 million in 2026, and then a further 1% decrease to 28.8 million in 2027.
Thanks, Erin. What does this mean for slaughtered numbers then?
Yep, so this year to date already, processors are tracking around 12% above the same time last year, and supply is expected to remain solid through to the end of the year, pending climate outcomes across the country. Slaughter is projected to increase 3% to 8.5 million head for calendar year 2025. And then as the herd shrinks, the turn-off capability will be impacted by female slaughter remaining elevated, leading to 8.1 million head turn-off in 2026 and just below 8 million in 2027. This sustained destock is driven by a high stock turn-off rate. So if Australia does not experience a prolonged national drought, turn-off should still remain elevated, though not as pronounced as those peaks that we saw in 2014 and 2019 with that drought-driven liquidation.
So in 2024, we saw record production. What is the outlook for beef production this year?
So I'll start with carcass weights because they have a really strong impact on production. Average weights are expected to decline this year to 307 kilos, 307 kilos per head, which is common in periods of higher turnoff. Weights are then expected to adjust to trends as that female slaughter tips back slightly, lifting back up to 310 kilos in 2026 and then up to 318 by 2027. Elevated slaughter matched with these weights will enable production to once again reach records by the end of this year, lifting 2% to 2.6 million tonnes. And then as slaughter rates decline over the following 2 years, production will increase 4% to 2.5 million tonnes for the following 2 years.
Great, thanks, Erin. Now we've stepped through the supply forecast. We'll move on to covering more macro issues that were raised in the industry-wide consultation process when compiling these projections. As a heavily export-focused market, exchange rates have always impacted the global export capability of Australian beef. With the AUD currently at historical lows, the document highlighted some of the broader impacts of a lower exchange rate along the supply chain. Focusing on the supply forecasts for today's webinar, Erin will now step us through a developing dynamic in the red meat sector on how countries' processing capacity has evolved. Australia's processing capacity has evolved, improving their procurement and efficiency in labour through managing new constraints related to production volumes. Thank you, Erin.
Thanks, Jack. So in the last 2 decades, Australian beef production systems have adapted and evolved to changing demands. Domestic processors and the supply chain have been able to absorb volatility in supply, ensuring consistent production of Australian beef for our export markets. The adaptation of the current system was seen really clearly in 2024. Australia produced more beef than ever before, despite slaughter volumes being 7% below the previous record 10 years prior, with that on that chart on the left with the 9.2 million head throughput. Back in 2014, a severe drought drove these intense liquidation, causing record slaughter production and export figures for the time. And then since 2014, we have invested really heavily in our feedlot sector, consistently increasing numbers of animals turned off from grain-fed systems each year. This has a direct influence on carcass weights, supporting the 33 kilo lift in average carcass weights from 2014 to 2024, which in turn supported that record volume output from 700,000 head less. This trend is likely to continue as Australia continues to invest in both grain-fed beef and productivity improvements in the grass-fed system. Australia achieving record production without a national drought demonstrates the sector's ability to sustain these high output levels. If conditions do turn dry, we will likely see turn-off increase even further, which could place additional strain on processing capacity as limitations move from labour and number of head throughput to volume, cold storage, logistics, and then the focus will shift to whether the supply chain can keep pace. The ability to manage storage and streamline logistics and maintain a flexible workforce will be essential in navigating the challenges of record beef output.
Thank you, Erin. Over to live export. In 2024, Australia's live cattle exports increased in volume, making a second consecutive year of overall growth. In 2025, Australian cattle supply for live export is expected to remain strong, aligning with 2024 levels. Tim Jackson.
Great, thanks, Jack. In general, the outlook for live export over the forecast period is stable, with a rise in numbers over 2025 and a more substantial lift in 2026. Last year, live export numbers lifted 13% from 2023 to a shade over 766,000 head, which was a 4-year high in exports. As the northern herd rebuild kicked off later than what we saw in southern Australia, supply took longer to come online, and increased supply really only lifted substantially in 2024. In 2025, we expect conditions to remain largely consistent with what we saw last year, meaning that exports will continue to rise. Essentially, as the northern rebuild matures, it'll bring increased supply to the market, which we will in turn boost exports. To put some numbers onto it, that means that we're forecasting a 6% rise in live export to 803,000 head next year. In 2026, we forecast that supply will peak at 971,000 head before coming back down in 2027. It's worth noting here that although we expect supply to peak in 2026, we do not expect that exports will reach the previous peaks seen in 2015 or in 2019, and we also don't expect that export numbers will fall back as quickly as we saw in 2026 as we saw in 2017 or 22. Instead, we're forecasting a degree of stability in export volumes over the forecast period, given the reasonably mature state of the northern herd and the moderate pace of growth in exports over the past several years.
Thank you very much, Tim. Before I continue, just a reminder, the Slido QR code down the bottom right to submit your questions. We're ready to answer those at the conclusion of our projections reporting. So now on to global supply. Australia exports up to 77% of beef that we produce into over 100 markets all over the world. This being the case means that much of our market relies on and is impacted by global supply and demand dynamics. In 2024, Australia exported more beef than ever before into an extremely strong global market. The United States, while being a competitor for the Australian beef trade, has become the #1 market for Australian beef last year, while movements across Brazil have changed our export flows. Tim will now take us through this global picture, starting with a brief outlook. Following on with how our major competitors it will impact Australia's beef exports over the forecast period. Thanks again, Tim.
So in these projections, we've focused on the United States and Brazil as the world's largest beef producer and exporter respectively. That means that supply from both countries is extremely important to understanding the global trade and what type of opportunities exist for Australia. So let's look at the United States first. And what is immediately clear is that the US is still destocking. The herd at the start of this year stood at 86.6 million head, which is about 0.5% below 2024 and the smallest herd in 74 years. This continued destock is primarily due to heifer slaughter. Cow slaughter fell by 15% over 2024, while heifer slaughter remained fairly stable. This meant that the supply of lean beef fell sharply. Most cows in the US don't go through feedlots. So cow slaughter disproportionately contributes to lean beef production, and lower cow slaughter means lower lean beef production. At the same time, fed beef production lifted. Heifers usually do go through feedlots, so stable heifer slaughters meant that fed beef made up more of total production than normal. And at the same time, carcass weights lifted as high cattle prices and relatively cheap feed prices incentivized feedlots to put weight on. That explains the odd dynamic that we've seen last year, where US beef imports were very strong, but exports, as in US exports to other markets, were broadly in line with year-ago levels. Essentially, the US was importing large amounts of lean beef to make up for lower cow slaughter, while continuing to export secondary cuts of grain-fed beef in large volumes. Looking forward to 2025, this dynamic is likely to persist. Demand for feeder cattle remains very strong, so there's a strong incentive for producers to sell heifers into feedlots, while the small herd means that the supply of available cows continues to shrink. The US will continue to be short on lean beef, while fed beef production is likely to remain fairly robust. Taking the longer view, this means that when heifer slaughter does come down, the shortage of beef in the US will expand from just lean beef into fed beef. That will present an opportunity for Australian industry, but for it to happen, it requires a meaningful reduction in heifer slaughter and the commencement of a meaningful rebuild.
Thanks, Tim. Talk us through Brazil.
Can do. Brazil hit production and export records last year, with production hitting over 10 million tonnes and exports hitting 3.6 million tonnes in carcass weight equivalent, which translates to about 2.5 million tonnes in shipped weight. The records set in 2024 were due to a drought boosting turnoff in the usual cyclical way, but also due to long-running increases in productivity. What that means is that in 2025, production is likely to fall due to improvements in the cyclical drought conditions that we saw last year, but the improvements in productivity are structural, which means that Brazil's position as the world's largest beef exporter is likely to remain over the forecast period. One of the key changes has been the emergence of an export-oriented processing stream. Over the past 15 years or so, Brazilian domestic consumption has fallen over the past few decades as processors sought to meet high demand in global markets. Initially, this demand was mostly seen in China, and over the past decade, we've seen exports from Brazil to China rise from almost nothing to over 1 million tonnes per year. While China remained the largest market for Brazilian beef in 2024, it made up a slightly smaller proportion of exports than in 2022 or 23, as weaker consumer sentiment in China subdued demand. What happened next is quite important. Domestic consumption went up, though by less than you'd expect, and Brazilian exports diversified. They went to 3 key locations: Southeast Asia, the Middle East and North Africa, and to the United States. This points to a longer-term challenge in the global market from Brazil. Carcass weights from Brazil are likely to continue lifting, feedlot infrastructure continues to develop, and aggregate herd genetics are continuing to improve. So in the short term, the supply of beef is likely to ease somewhat as drought-dependent slaughter numbers ease. But in the long term, Brazilian exports will remain a major factor in the global market. And as trade flows from last year showed us, they can diversify, which means that Brazilian market share could rise considerably outside of China.
Great, thank you, Tim. Certainly a lot there. So now we've covered most of the document, coming towards the end. Again, Slido QR in the bottom right or the top right corners if you have any questions. While those start flowing through, I'll let Emily finish off with the price forecasts and some of the major points raised over the last half an hour. Then we will endeavour to answer your questions. Thank you.
So thanks, Jack. As always, MLA doesn't forecast cattle prices. However, the projections document is an opportunity for external analysts across industry to provide a price forecast out until June 2025. Which is then aggregated and then published in this document. So this year, Rural Bank, Rabo, S&P and Mercado all produced a price forecast for the 3 cattle indicators. These forecasts have 3 indicators remaining within 1% of the current price. I'll now pass on to Steve to kind of finish off the actual price forecasts.
Thanks, Em. So the 4 analysts that contribute to our aggregated forecast, as Em said, are Mercado, Rural Bank, Rabo and S&P, and they've all predicted prices to continue to hold and move more laterally for the first 6 months of 2025. For the National Young Cattle Indicator, or NYCI, which is MLA's premier restocking indicator, the analysts expect it to be at 358 cents per kilo live weight by 30 June 2025. With an upper limit of 384 cents per kilo carcass weight and a lower limit of 316. We move on to our indicator that reflects the feeder market, the feeder steer. The same 4 analysts for the feeder steer indicator expect that the price will be at 363.5 cents per kilo carcass weight as of 30 June 2025, between a high of 396.5 and a low of 334 cents per kilo carcass weight. Lastly, if we get to the end of the supply chain and look for heavy finished animals that are being bought by processors, we see that for this indicator, the forecast is for it to sit at 350.75 cents per kilo carcass weight, with a range between 315 and 397 cents per kilo carcass weight. So we know that stakeholders get a lot of value and really, really eagerly await the analyst forecast. But it is important for me to reiterate and note what Em said. These are not generated by MLA. They are aggregate averages of the forecast provided by industry analysts. And we really appreciate those analysts that do contribute it, that are obviously at the bottom of that slide there. So Jack was saying, what is the future hold? Well, the future holds, as we look ahead, Australia's investment, and I think this is the time to sum up what is in the document before we sort of move on to questions, is looking ahead, Australia's investment in domestic production, processing capacity and global trade relationships have positioned the cattle sector on really solid footing when we look across the forecasted period. And that's really important because the forecast period does predict a continuation of these record high beef production or record high beef production years. So what that really means is that the industry is really in a good position and global dynamics are in a really good position as we move into this period of high beef production.
Great. Thank you, Steve. And thank you also to Erin, Emily and Tim for your insights today. Your responses have provided some valuable insights into the outlook for the Australian beef sector. So that's the conclusion of the projections so far. We'll now go to answer your questions. Again, still have the opportunity to submit some as we run through them. There are already a few in the Q&A feed, which we'll take a look at now. First one I want to start off with, very recent, very relevant to Erin. Was a Cyclone Alfred considered as part of these projections? If not, do we see any risk in the direction of the numbers? Okay, will Alfred affect the numbers that we've projected today?
Thanks, Jack. So these projections were developed and pulled together before Alfred hit the coast, but it's definitely a consideration. Looking at the impacts, we've seen properties be impacted, a lot of transport avenues, so trucks, be impacted, roads. Then processors in the past week some have shut down or reduced capacity, which will reduce the output for last week and possibly this week. And then we've seen the Port of Brisbane shut down for a week, which definitely will have a short-term effect on exports. In terms of the calendar year forecasts, from what we know now and from the impacts that we know now of the cyclone, it's unlikely to impact the long-term throughput and figures. Any processor shutdowns, we believe that the processors would be able to recoup those numbers in coming weeks. They have multiple avenues to do this with extra shifts. And then in terms of export figures, exporters deal with logistical challenges frequently and are able to kind of adjust. What we might see is a lower March volume throughput, but then that might flow into April and then just be picked up. The red meat supply chain is very adaptable to these events, and we believe it won't have an impact on the total calendar year numbers.
And Jack, I'd just add on that is if there is any change to producer sentiment or anything like that, and we do see producers make decisions around inventory levels, that will be reflected in our September release. So that's why we do have two releases, we said at the start, is it allows us, if anything does change over the forecast period, such as cyclones and events, these can be reflected in our release in September.
If you can't hear me, I would ask another question, this one for you, Steve. Will the feedlot sector continue to grow at the same rate as the past 3 years?
Thanks, Jack. So as Erin showed in the key macro part of the presentation, we have definitely seen a growth in feedlots, and it hasn't just been in the last 3 years, it's been for the last sort of 14 years, we've seen steady growth and investment in the feedlot sector. It provides continuity of supply. It also allows consistent end product for consumers and the like. So we do expect that the feedlot sector has become an integral part of the Australian sector, often responsible for between 35 and 50% of production in any one quarter. What we are hearing, so capacity, we've got 1.6 million, capacity of 1.6 million head at the moment. So that is the built capacity of the feedlot sector. We've got 1.4 million cattle on feed, which means that feedlots are 87% full, which is close to capacity if you think you've got to have sort of pen spelling and that at different times. So we know that there has been growth. We do know that there are DAs out there and there have been approved feedlots, so they may come online, or they have the ability to come online. One thing we are hearing is the cost of building at the moment, especially in regional Australia, is extremely expensive, extremely hard. So we do know that there are some approvals out there, but the biggest barrier we're hearing is actually going to be the cost of building, and also whether they can get the builders out there to build any expansion in capacity. So theoretically, yes, but it's going to be the hurdle around accessing labour to build them and the cost of building extra pens.
Thanks, Steve. Another extraordinarily topical question. Tim, how will Trump's potential maybe tariffs on agricultural supplies into the US, maybe including beef, how will that affect beef if that does happen?
Thanks, Jack. And we're likely going, this has been a topic of some amount of interest. The short answer is that it's very difficult to say. The long answer is that it's very difficult to say because we don't understand, we can't include that in the forecasts because we don't have a solid understanding of what the likelihood of any kind of change to our market access looks like. And it's very, very difficult to say specifically what type of effect that would have. Shifts in trade flows, when they do happen on the basis of these sorts of changes, are often quite unpredictable. And so it's ultimately, it's very, very difficult to say. It's not the sort of thing that is included in the kind of like supply-oriented projections document. In the same way that MLA, we don't ourselves engage in price forecasting. We don't engage in kind of forecasting or like forward-looking, trying to put numbers on what the effect that something like the imposition of a tariff or any change to market access might have. I think what this does underscore, though, is firstly how strong Australia's market access conditions are. The fact that Australia has the number of high quality free trade agreements that we do, that our technical market access is the best in the world. And it means that, as I think Jack said earlier on today, when we saw record beef exports last year, that was going, our red meat exports overall go to over 100 countries. Our beef exports go to over 85 countries. And that's underpinned by a really, really strong market access, like set of free trade agreements and technical market access schemes that Australia has, that have served Australian industry well over the past several decades.
Great, thanks, Tim. Appreciate it. It's a difficult question to answer. We'll stay with you now, because we've got another interesting question on live export. What is the reason behind the live export projected peak in 2026?
It's essentially that we expect that the kind of internal dynamics in the herd are such that the availability of feeder and slaughter weight cattle up in the north will peak in 2026 and then come off very slightly. And that's broadly a kind of consequence of the timing and intensity and speed of the previous rebuild. I think the important thing to recognise here is that even though there is a kind of nominal like peak in numbers, that doesn't mean that in 2027, when numbers come down slightly, that's a relatively soft shoulder, so to speak. The decline is relatively modest because we wouldn't be looking at a destocking period or anything like that. That's not what's being forecast here. It's simply that as a result of the kind of dynamics in the age profile of the northern herd as it currently exists, we expect that supply will peak in 2026 and then ease off slightly in the next year. But it's not a substantial change. And that doesn't imply that we'll then go into a destock after the fact.
It's 12. Just to reiterate that what Tim has said, Jack, is the drop in between 2026 and 2027 is 12,000. Still with those live export numbers in 2027 remaining above 950,000. So that's still quite high live export, up from where we were in 2024 of 746. So it's not like Tim said, a destock. It's just what the model says, is that it'll sort of plateau at that 950, 970 level.
Great, thank you both. Emily, according to what is MLA's view on the downside price risk to the cattle industry, or what's it doing to address these?
Yeah, thanks, Jack, for that question. I think when you look at the current market, we're seeing pretty stable, pretty laterally moving prices. But I think we're seeing a lot of producers to kind of deal with that downside is actually diversification, whether that's having sheep and cattle, or cropping or mixed operations to really weather those downside impacts of price. But obviously that's more of on a business to business level question that you're going to make on an individual level. So, MLA has a role in reporting pricing, but it's not necessarily capable of helping you with your business strategy per se.
Great, thanks, Emily. Erin, what's the percentage difference between the weekly NLRS slaughter report and the slaughter number reported in the projections document?
So I'll start with the ABS slaughter figures. They are released 4 times a year, they're quarterly totals. Because we only get these figures every 3 months, MLA have the NLRS, or National Livestock Reporting Service, weekly slaughter report, which is a voluntary survey from processors aggregated by state and published weekly, which gives industry an idea on the, shorter term throughput looking backwards. The national averages of the NLRS, when you compare it to ABS actuals, so for last quarter, we had 79% national coverage, and that varies slightly across each of the states. But then when we look at the 12-month average, it's 81% coverage. We pride ourselves in these figures. They are consistent responses from individual processors, which are really useful for industry.
Thank you, Erin. Got another question here. Steve, I think this might be a good one for you. According to the forecast number about herd numbers for the next 3 years, it's declining year by year, primarily due to dry weather. Is there any possibility that the herd number will go up?
Thanks for that, Jack. So part of what we do in this, we have looked at historic weather trends, actually peer-reviewed, and it shows that historically the weather pattern has been, if you look over a 5-year period, and this is a peer-reviewed thing, it goes average with a wet followed by a wet year, with an average year, 2 dry years, and an average. We've had 4 good seasons in a row for large parts of the country. We know that possibly doesn't necessarily hold true. So at the moment, what we do know when we look at those herd numbers is those herd numbers are financial year. So the 2025 financial year actually is in 4 months. So we know that the current conditions will probably hold this year, and that's why we've got that only negligible drop in the herd. We've got quite a strong, as we've heard, strong northern system at the moment with the south herding, and so you've sort of those both negate each other out a little bit. What we then see going through to 2026 is based on an average year. based on where stocking rates are at and based on what we know with where soil moisture is. We know that even if the tap turned off in the north, that there is it's going to, what our data and analysis shows, that'll be average. And then in 2027, we are getting into the third year of our forecast. If the weather changes and there is, say, an uptick in 2027, that'll be reflected in our September release. So like we said, these are reflective of the best data, best inputs that we have available to us as of the end of February 2025. And if there's any changes, things do change, they will be reflected in our updates. And that's why we do release the document twice a year, because as of right now, what we have in that projection and that decline, because of where the herd is at, like Erin touched on, high supply and slaughter for many years, high stock turnoff rate, that's where we get that destock coming from. And if anything changes, it'll be reflected in September. We're having a few issues, technical issues with Jack, but I'll ask one. So how do we use the BPS versus the Beef Producer Intention Survey inputs versus the ABS or MLA's numbers? Is the ABS is the official, as they call it, admin data, and that's what's reported, obviously, to the FAO and other agencies. So we use that as our baseline. What we do know is, so that is using the ABS, and what our model does going forward uses a range of inputs, not just one, not just the Beef Producer Intention Survey, not just ABS, not just ABS. We have a range of sources. And what ours do is ours are a forecast of what the future of the herd is doing off the basis of ABS numbers. The Beef Producer Intention Survey is included in our survey, so we get calf numbers from there, fertility numbers from there. But what we do is we use the ABS as the official numbers as the starting point for our model. And what we have seen in the last 12 months, ABS came out with a revised herd, and it was close to where our figure is. So what we've used is we've used the ABS number, and we use that as the point in time, and our model forecast off that using Beef Producer Intention Survey. But there is a nuanced difference. The Beef Producer Intention Survey is a survey, whereas our projections is based on a model. And we may have had some technical issues and lost Jack. So that seems to be the end of questions. So I'd like to thank that there's no more questions. I'll give it one more minute in case there's any questions to come through. No more questions coming through. So thanks to Erin, Tim and Jack for the insights and MCs today. All the responses have been very valuable and provided insights into the outlook of what the beef herd and the red meat sector is going to look like going forward. So what we're going to do now is there's no more questions. We'll give it a wrap. So that's an end of the webinar. Appreciate everyone's time for logging in, watching the webinar, and also for asking questions and being thoroughly engaged. If you could provide us with your feedback as you leave using the QR code on the slide right now through Slido, we'd really appreciate that, because we want to continue to make sure that we're delivering webinars, information, reports that are really valuable to the whole supply chain. And we want to make sure that your feedback will flow through and shape the future events. Additionally, as Jack said at the introduction, a recording will be made available shortly, which can be accessed via the MLA website or YouTube. If you'd like a PDF of these slides, just contact the market information team and we'll be able to provide these to you. And finally, if any questions weren't answered today, please reach out to the market information team. We're here to help the supply chain and producers, so we're more than happy to help. We provided our contact details in this slide. We're happy to always be available. One thing I'd just say before we close out the day is we have our sheep projections webinar tomorrow. So we released our sheep projections document yesterday when we released our cattle one, and we will be doing a similar thing for the sheep industry tomorrow. So I would really encourage everyone, if they haven't already, to register for that on the MLA website. And that is a wrap. So we'd really like to thank you for joining us today and hope you have a great day. Thanks.